Good morning and welcome to today's episode of our daily crypto news podcast. We have a packed show for you today covering some of the biggest market-moving stories in the crypto space. I'm joined by my co-host and we're excited to dive into the latest developments.
That's right. We're seeing some significant price movements in the gaming token space, particularly with B3 Ethereum gaming token on Base, which has jumped to a new high price after its airdrop. This token has been gaining traction, especially with the announcement that the parallel third-person extraction shooter game is being built on the B3 platform.
This is a great example of how gaming and blockchain are intersecting. We've seen a lot of interest in gaming tokens and NFTs in recent months, and it seems like this trend is only going to continue. The fact that B3 is being used to build a high-profile game like this is a big endorsement of the platform.
Absolutely. And it's not just gaming tokens that are making waves. We're also seeing some significant developments in the stablecoin space. Index Coup's Cruz Enox recently wrote about the stablecoin revolution and how on-chain money markets are challenging traditional finance's concept of risk-free rates.
That's a fascinating topic. The idea of a risk-free rate is a fundamental benchmark in traditional finance, but with the rise of DeFi and on-chain lending, we're seeing a structural shift in how investors think about risk and return. Enox argues that high-yield, low-risk on-chain money markets are sustainable and could potentially disrupt traditional finance.
This has big implications for the future of finance. If on-chain money markets can offer higher yields with lower risk, it could attract more mainstream investors to the crypto space. And with the rise of stablecoins, we're seeing a more mature and sophisticated market emerge.
We'll be exploring this theme in more depth throughout the episode, but it's clear that the lines between traditional finance and crypto are blurring. We're seeing more institutional investors entering the space, and the development of more sophisticated financial instruments is only going to accelerate this trend.
That's right, and it's not just about the technology itself, but also about the ecosystem that's being built around it. We're seeing more and more use cases emerge, from gaming to lending to stablecoins, and it's all contributing to a more vibrant and dynamic crypto market.
Well, we've got a lot to cover today, so let's keep moving. We'll be diving deeper into these stories and exploring what they mean for the future of crypto. Stay tuned.
We just wrapped up our discussion on the growing influence of cryptocurrency professionals in the regulatory space, and now it seems like that trend is set to continue. The White House is reportedly set to name another cryptocurrency professional, Jonathan Gould, to lead the office of the Comptroller of the currency.
That's right. Gould previously worked as chief legal officer at Bitfury, a prominent player in the crypto industry. This move is significant as the OCC plays a crucial role in regulating large national banks. What do you think this means for the future of crypto regulation?
It's definitely a positive sign for the industry. Having someone with a deep understanding of crypto and blockchain technology leading the OCC could help pave the way for more innovative and forward-thinking regulations. Building on what we discussed earlier, it's clear that the White House is serious about getting the right people in place to shape the future of crypto regulation.
Speaking of shaping the future of crypto, let's talk about the current state of the market. Crypto midcaps are struggling, and it's making investors think twice about where to put their money. According to CoinDesk, Andy Bayer, midcaps have delivered significantly higher volatility and lower returns compared to large cap assets.
That's a really interesting point. It seems like the old adage, size matters, is holding true in the crypto market. Investors are starting to realize that large cap assets are often the safer bet, at least in terms of returns. But what about the potential for hidden gems in the mid-cap space? Are investors missing out on opportunities by focusing on the bigger players?
It's possible, but the data suggests that the pursuit of hidden gems in the mid-cap space hasn't been rewarded. In fact, mid-caps have delivered significantly lower returns compared to large-cap assets. This raises an interesting question. Will a large-cap tilt in digital asset investing deliver excess returns to investors?
That's a question that's definitely worth exploring. As the crypto market continues to evolve, it's clear that investors are going to have to be more strategic about where they put their money. Maybe it's time to take a closer look at the large-cap assets and see if they can deliver the returns that investors are looking for.
Absolutely. And with the regulatory landscape shifting, it's going to be interesting to see how this all plays out. We'll be keeping a close eye on the market and the regulatory space to see how things develop.
Building on what we discussed earlier about the growing interest in Solana, it seems like the network is gaining even more traction. Franklin Templeton has just announced that it's expanding its $594 million market money fund to Solana.
That's right. This move comes on the heels of Securitize linking up with Solana to bring tokenized real-world assets to the network. It's clear that Solana is becoming a more attractive option for tokenization issuers.
Exactly. And this is a big deal for Franklin Templeton's on-chain U.S. government money market fund, also known as FOBXX, with a $594 million market cap. It's the third largest tokenized money market fund out there.
And now, Solana is joining the list of blockchains that support trading of FOBXX. It's interesting to see how this will play out, especially since Ethereum is still the dominant player in the tokenization space.
Speaking of dominant players, let's talk about Robinhood. The retail brokerage just reported a 700% surge in cryptocurrency trading revenue in the fourth quarter. That's a staggering number.
Absolutely. Crypto revenue reached $358 million, up from just $45 million a year earlier. And what's even more impressive is that this accounted for more than 1/3 of total transaction-based revenue, which rose over 200% to $672 million.
That's incredible growth, and it's clear that the rebound in digital asset volumes has been a major driver of this success. It's also worth noting that this pushed total Q4 revenue up 115% year over year.
Yeah, and this is especially interesting given the challenges that Robinhood has faced in the past. It's clear that the company's crypto offerings are a key part of its growth strategy.
And it's not just Robinhood that's benefiting from the crypto boom. We've seen a number of other companies report strong growth in their crypto revenues. It's clear that the industry is still in a period of rapid expansion.
Absolutely. And as we've discussed before, this growth is being driven by increasing adoption and mainstream recognition of crypto assets. It's an exciting time for the industry, and we'll be keeping a close eye on developments in...
As we discussed earlier, the intersection of geopolitics and cryptocurrency continues to be a complex and evolving space. A prime example of this is the recent prisoner swap between the U.S. and Russia, which involves a key figure from the world of cryptocurrency.
That's right. Alexander Vinnik, the former operator of the BTC-e exchange, is being released from U.S. custody as part of this prisoner exchange. Vinnik had previously pled guilty to conspiracy to commit money laundering, and his release is a significant development in the ongoing saga of BTC-e.
For those who may not be familiar, BTC-e was once one of the largest and most influential cryptocurrency exchanges in the world. Its downfall was a major event in the cryptocurrency space, and Vinnik's subsequent arrest and prosecution were closely watched by many in the industry.
And now Vinnik's release is being seen as a significant concession by the U.S. government in order to secure the release of American teacher Mark Fogel, who had been imprisoned in Russia. It's a reminder that the world of cryptocurrency is often intertwined with larger geopolitical events and interests.
Building on what we discussed earlier about the growing trend of companies investing in cryptocurrency, we have another example of a publicly traded firm adding Bitcoin to its treasury. KULR, a San Diego-based company that provides energy storage solutions for aerospace and defense companies, has just made its third major Bitcoin purchase in recent months.
That's right. KULR started buying Bitcoin in December with an initial purchase of 217.18 Bitcoin for approximately $21 million. Then, just last month, the company bought another $21 million worth of Bitcoin, and now they've announced a third purchase of $10 million, bringing their total holdings to a significant amount.
It's interesting to note that KULR is not a company that you might typically associate with cryptocurrency or blockchain technology. They're primarily focused on energy storage solutions, but they clearly see the value in diversifying their treasury with Bitcoin.
And it's not just the amount of Bitcoin that KULR is buying that's significant, but also the regularity of their purchases. This is now their third major buy in just a few months, which suggests that they're committed to building a substantial Bitcoin position over time.
Speaking of companies investing in cryptocurrency, it's worth noting that KULR's approach is somewhat different from what we've seen from other companies. While some firms have chosen to invest in cryptocurrency through specialized investment vehicles or partnerships, KULR is taking a more direct approach by buying and holding Bitcoin outright.
That's right. And it will be interesting to see how this approach plays out for KULR in the long term. As we continue to follow the story of companies investing in cryptocurrency, it's clear that there are many different approaches and strategies being employed, and not all of them will be successful. But for now, KULR's commitment to building a substantial Bitcoin position is certainly worth watching.
As we wrap up today's show, I want to revisit our earlier discussion on OpenAI's CEO Sam Altman's ambitious plans to merge the company's AI models into a single unified system. What are your thoughts on this development, and do you think it's a strategic move to stay competitive in the AI space?
I think it's a bold move, and Altman's vision for a single, all-encompassing AI model is reminiscent of the one ring to rule them all concept. By simplifying their product lineup, OpenAI may be able to streamline their offerings and make them more accessible to a broader audience. However, it's also a response to the growing competition from companies like DeepSeek, which has been making waves with its more straightforward and capable AI solutions.
That's a great point. It's clear that OpenAI is feeling the pressure from its competitors, and this move may be an attempt to regain the upper hand. I also want to connect this back to our earlier discussion on the intersection of AI and crypto. As AI technology continues to advance, we're likely to see more overlap between these two spaces. What implications do you think this could have for the crypto industry as a whole?
Well, as AI becomes more prevalent, we may see increased adoption of AI-powered trading tools, risk management systems, and even decentralized finance, DeFi, protocols. This could lead to greater efficiency and accuracy in crypto markets. But it also raises concerns around job displacement and the potential for AI-driven market manipulation.
Those are all valid concerns. Moving on to our other major story of the day, President Trump has made some significant nominations for his crypto regulation team, including picks for the Office of the Comptroller of the Currency, OCC, and the Consumer Financial Protection Bureau, CFPB. What do you think these nominations say about the administration's approach to crypto regulation?
It's clear that the administration is taking a more serious approach to crypto regulation, and these nominations reflect a deep understanding of finance and federal policy. The OCC in particular plays a crucial role in overseeing the banking industry, and the CFPB is responsible for protecting consumers. By filling these positions with experienced professionals, the administration is signaling its commitment to creating a more comprehensive and effective regulatory framework for crypto.
That's a great point. As we look ahead to the coming weeks and months, what are some key takeaways from today's stories that our listeners should keep in mind?
Well, first and foremost, the AI space is heating up, and we're likely to see more consolidation and innovation in the coming months. In the crypto space, the administration's nominations suggest a more serious approach to regulation, which could lead to greater clarity and stability for investors. However, it's also worth noting that the intersection of AI and crypto is likely to become increasingly important, and our listeners should be paying attention to developments in this area.
Absolutely. And finally, what's your market outlook for the coming week? Do you think we'll see any significant price movements or trends?
It's always difficult to predict with certainty, but I think we may see some continued volatility in the crypto markets as investors respond to the administration's regulatory moves. In the AI space, I think we'll see more attention focused on OpenAI's unified AI model and the potential implications for the industry as a whole. Overall, it's shaping up to be an interesting week, and we'll be here to cover it all.
Well, that's all for today's show. Thanks for joining us, and we'll catch you tomorrow.